All right, let's take another look at our moving average strategy where price pulls back and falls to the 20 EMA and the 50 EMA and sometimes dips below them. How do we find buying opportunities using Fibonacci levels and trendline breaks? So we're going to be using the 10,000 tick chart as our bigger time frame, and we're going to be using the 1,000 tick chart for our smaller microscopic time frame. So let's look at some examples right now. Here's an example of momentum, but first let's take a look at the big picture. 10,000 tick chart, we see a pullback here in the red box. We're going to be looking at what happens right there. Just on this little dip down right here, because now we've got price above both moving averages. We've got a strong candle coming in, and we can really tell but with our eyeball that this basically comes back to 50%. And we're looking for something in this area on the lower time chart to give us an indication that we are going to try to go long on this. All right, so let's go to the next one. Okay, right here in this red box is the same exact area that we just saw on the higher time chart. So what do we notice? Well, 2 tries to sell, comes back up, consolidates. This is a 2 try sell consolidation pattern off of the 20 moving average, right? So we draw a trend line like we normally do, and we look for the breakout and the pin test. The pin tails test, we look for the consolidation, and that is where we get long, right there. Okay, stop loss is down at the bottom, and our entry points right here. We hit a 1-to-1, and we're happy with that. Let's talk about multiple trend line breaks, because now it gets more complicated. We're going to be looking at this area on the 10,000 tick chart. We just got through finishing up this area here, and we're going to look at this area here. It gets complicated, and we're going to really look at some complication over here after that. But at least still in this area here, everything's above the 20 moving average, which is great. So let's go to the lower time chart in that area. This is what we see in the same red box. We know that price is above the 200 because it's above the 20 on the 10,000. Here's the 200 on the 1,000. So as long as price stays above the 20 EMA on the 10,000 tick, we're going to know that price is above the 200 moving average on the 1,000 tick. So what do we see? Well, we start drawing trend lines immediately. So we up here at high, we start drawing trend lines based on this pivot and this pivot, right? You just start drawing your trend lines because you never know when it's going to come in handy later. And then we get a pivot right here, so we draw a trend line going down this way, right? And we're just waiting for price to come back around, okay? And so we see price pivots starting to come down this way and this way. So we have to keep drawing the trend lines wherever the pivots are until we see price stop going down. And so we see that we have the ability here for price to break out on that candle. It starts to consolidate a little bit right here. And we have a stop loss down at the bottom, and we should be able to get something out of this, right? So even if we get higher, even if we wait for the consolidation to form after the breakout, stop loss is under the pivot. Let's say we get an entry up higher. That's where we got the entry on this example. We still get a 1-to-1 target hit on this. Okay, so it's all good on this particular one here. But price is still kind of strong. It's above the 200. It's above the 20 on the 10,000 tick chart, and it is in an area of momentum still. Say when price is above the 20 EMA here on the 10,000 tick, we still got momentum. This is when it starts to break down right here, which we're going to look at next. Then we get more complications with the trend lines. So let's go to that next. This is the most difficult kinds of pullbacks that we have, okay? This is the area that we're talking about on the 10,000 tick chart where it falls below the 20 moving average right here, but it also tests and starts to trade below the 50. And what we're going to notice on this is we're still okay with trying to find trend line breaks at Fibonacci levels. Why? Well, the 20 moving average is still above the 50 the whole time. If for one moment price gets so low that the 20 comes down past the 50, then we are no longer looking to go long trendline breaks. You have to abandon this particular strategy and find a different strategy for going short, or you could use the strategy for going short. But we do have to even go out to the 15 moving average, the 15-minute chart. to look at this, because this is the area right here we're talking about. And you can see that it pulls back to the Fibonacci 50 to 60% zone right here. And this big dip down is the lowest it goes on the time charts we're looking at. So this is the lowest it goes right here on the 10,000 tick chart. That's what we're seeing right here on the 15-minute chart. Okay, now these multiple trend lines, they grind lower. They're the hardest ones to figure out, okay, because price breaks a trend line and then it grinds lower. It breaks a trend line and it grinds lower here. You can see it breaks the trend line and it grinds lower. Eventually it goes up, but how many losses do you take? How do you avoid those losses? And how do you manage your risk in all that? So we're going to look at each trend line one at a time in this example, okay? Here's what it looks like from a distance, trying to draw Fibonacci retracements from different points, trying to get it all figured out with support and resistance. This is just a big picture. Let's take one look at a time at the Fibonacci. Here's a Fibonacci tracement from this pivot here. We can see the 50 and 60% zone right here. When price gets the absolute lowest, it's right in that golden zone, the 50% to 60% zone, right? Here's the Fibonacci drawn from this pivot. And because each trend line's coming down at a different level, we can see the one that works. The very first one falls right at the 60% level. I hope you can see that. Here's the 60% level. Here's the 50% level from this pivot. And this first trend line comes right down to that and bounces and does well. So let's take a look at that first trend line now. Okay, we're going to look at all four of them. Let's look at the first one first. All right, here we go. This is the first one. Remember, this falls at the 62% retracement level, and we're looking for a trend line break, and we're looking for an entry, and we're looking for stop loss. So right here in this area, we get a consolidation. We put our stop loss here, probably get long as soon as it starts to break out above that consolidation. And so the measurement for our 1-to-1 is right here, and we hit a 1-to-1 on that. Now, if we were in that trade and don't get out until way up here, we may not have even at all taken the second trade. So we could have avoided this second trend line failure by simply being in at the right time on the first one. But let's take a look. Let's say we missed the first one and we're like, oh, I was late to this, and only the second one is available. Let's take a look at the second one now. Let's say the second one's the only one you see. You're here late and you try to get in on it. Let's take a look at how everything works out. Okay, you try to get in on the breakout here and it retests, turns green. You're thinking, oh, good, because my stop was right here. Our target's up here. It turns green a little bit and then immediately collapses. This is a complete and total full stop loss failure on this one, right? So it'd be great to have avoided this one altogether. Being in at the right time, you can't actually avoid the wrong trend lines. If you get the right one, you won't be able to take the wrong one, and that happens a lot too. The third trend line is also a failure. Let's take a look at it right here. We see it breaking out over. We think that perhaps this green candle right here is going to do good. We get in on that green candle right there, right? So we get long here. Our stop loss is here. Target is here. And it comes down immediately and stops us out again. So that was a failure. Just all you can say about it. All right, now let's take a look at the fourth trend line. Also, I wanted to say that we might have been able to avoid that if we were looking at this, because that particular failure happened right here in this area right here. But it started to turn green a little bit right there, right? So depending on where you draw your trend lines and how you draw your trends, I like to use the body and the wicks. Sometimes I'll put them side by side so I get a good area, a good zone for the trend line sometimes. It might have been reasonable to actually avoid this one altogether right here, or wait for it to really clear it, because on this green candle here, we see it started to test immediately. And maybe we didn't enter in on that part right there. Maybe we entered in on as it pulled down, and our stop loss could have been much, much lower, saving ourselves some risk on that. Depends on how you play it with experience over time. Let's take a look at the fourth trend line real quick. This one was the massive success. We know that we're at the 50-60% golden zone for the Fibonacci levels. We already had that figured out. We're looking for this trend line break right here, and it consolidates up here, which is, we love to see consolidation. And I entered this example up high. I mean, surely for an example or a presentation, I could have said, oh, let's get in down here, let's keep our stop loss and did some kind of fantasy trade on it. I don't want to do that. I want it to be real. Okay. So we entered here at the consolidation. Our stop loss is underneath the trend line and at the below the 50% level, because sometimes price will come down 50% and then take off. So I didn't want to get caught in that. So it was below, it's down here. And here's 1-to-1 target hit, 1-to-1, 1-to-2 target hit, and 1-to-3 target hit on this one. So it more than made up for the losses that we experienced on the other one. So I'm just saying. And like I said, why did it work? Why did that one work better? Well, notice that price in that consolidation area that we entered in, price is right here above the 20 moving average on the 10,000 tick chart. It previously closed above on that sharp move up, closed above the 20, started consolidating. If we were using both time charts, we would notice that it's dipping off of the 20, and that would be a really good area to buy. So the winners outperform the losers in this case. I hope these videos help. They're helping me, and this is what I'm going to practice in February.